Happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, March the 27th. I'm going to take just a brief minute to discuss what markets did last week as we finally had a positive week in the equity markets, ending the downward trend that we had been seeing for several weeks prior, with the S&P 500 finishing the week up 51 basis points or 0.51%. We saw the mid cap index up a little bit better, up 64 basis points or 0.64%, and the small cap index is measured by the S&P 600 was up 50 basis points. And what I'd like to talk about today is we did see the bottom 2 weeks ago as of today, exactly 2 weeks ago today. We saw the bottom of the 10% correction. We saw the market hit right at 10% and bounce right off of that. But are we set up for that typical? Sometimes you'll see a V-shaped recovery where you run down 10% and you run right back up to where you were to those previous highs. Or we set up for something different, and we'll explain why we think we may be set up for something different, as well as are we seeing also at the same time a sector rotation from growth to value. And we'll discuss what happens in equity markets and why you can see some selling or downward performance of the index as a whole and not as case for the average stock. So as we said, the bottom is theoretically more than likely in from the correction that we saw. It is in from 2 weeks ago. But we have not seen a massive recovery back towards those highs. And we really think at River Place we're looking at more of a U-shaped recovery where you come and you kind of chop around in here for a little while and then you start moving higher. Maybe you call it a W, maybe you call it something else along those lines where you have fits and starts along the way. And the reason why we aren't having that V-shaped recovery yet is because we are still not getting 100% clarity from the new administration on tariff policies, economic policies, where things are going. It's changing so quickly and rapidly and intraday that it's hard for investors to see through that and not have a plan to just say, okay, here's what we're doing, now I can adapt and adjust and move on accordingly. It keeps changing, the target keeps changing, and that is allowing a lot of people to just say, we're just going to pause for right now. And you're seeing a lot of business leaders and executives. You saw CNBC release a survey yesterday where CFOs have come out and say there's more than likely a better chance of a recession than not. That's not our case here at River Place. But you're starting to see those trends as businesses hit the pause button as they're waiting to hear the outcomes of these new policies. And when things stop in our economy, because it is a consumption-based economy, it can cause a slowdown in our overall economy and send us towards those dreaded R word, the recession. So we really do think until we get more clarity and color from the overall impact of these new tariff policies and things along those lines, are they going to be as strict? Or are people waiting till April 2nd which is the president said is reckoning day? Are they waiting there to see the outcome of what it might be and then we adjust accordingly? Chances are that is the case, and that's why you're seeing the market swing so violently back and forth. Also, one of the things that we're seeing is a rotation out of the winners of the last 2 years in the growth names into the more value names or the more equal weighted S&P 500, and this is really interesting to see, and it's also a really healthy thing to see. But when these big rotations happen from growth to value, you're going to see some volatility in the equity markets because you're selling your high growth names to buy your lower growth names or your value names that haven't been performing as well the last 2 years. Well, remember the 30% of the S&P is comprised by those top 7 names, and that's going to control what that index does on a day-to-day basis. So sometimes you're going to sell some of those growth names, those 7, to buy the other 493 stocks. It's not just you keep the 7 and then new money comes in. Well, theoretically that would be great to buy the others to lift them up. Oftentimes what happens, especially professionals, will start moving money from one sector to the other, causing volatility in the marketplace. And we really believe that this rotation will continue to happen throughout the year until we get more color and clarity, as well as you just have had 2 incredible growth years for the growth sector. So it makes sense to digest this year and allow the value sector to increase. But what you can see on the index level is either stagnation, flat, or slightly down, while the average stock may outperform. So if you have questions about how to navigate this recovery time as we're going through it, or just questions about how to manage your personal portfolio at any time, we'd love the opportunity to speak to you. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.